Let's go to the trading floor in Chicago and find out what the talk of the floor is. We have Scott Gecas there with Wall Street Trading. Hey, Scott, what's going on?
Everything. I don't even know where to start. Everything is due to headline risk, the Trump effect again, putting the 25% tariffs up to 25% tariffs on Mexico. It's definitely going to affect pretty much everything across the board. The first thing that we are looking at is the corn market. Mexico is the largest importer of U.S. corn, and that's why you're seeing the corn market be a little bit under pressure rather than just the soybeans. The soybeans were down a little bit. They clawed their way back. All these markets are going back and forth and mixed. It's definitely a big concern with the weather going forward. That's really what's driving these markets is the weather concern. You can see that premium built into the option volatility just across the board.
So there's a real debate going on right now across farmland about the fact that, well, we have mainly wide open weather right now and heading into the weekend. However, a lot of the intermediate range and longer range forecasts are turning wet again. And there's a big debate over how much can we really get planted between now and maybe late next week. Will that give them enough time to get the fields dried out to really accomplish a whole lot?
Well, that's the hope. But what we also have to figure out is once they do get that planted, if they can get that planted, if we get more heavy rains, is it going to wash it away? How is that going to react? And does that go into, well, if they did plant it, do they get the subsidies or not? It's all up in the air. It's all across the board. That's why we're watching the headlines, constantly.
And to that point that you were just making, I did hear from an agronomist in Nebraska this morning who was talking about, I believe, in northern Missouri and also now in parts of Nebraska, they're starting to see signs of what they call crazy top in the corn, where if the corn is under a lot of water stress, sometimes that'll cause disruptions in abnormalities in the growth of the corn, and it'll get all twisted in among itself and really cause a lot of stress on that corn plant. Haven't heard of that for quite a while, and we'll have to see if there's more of that as we move forward. Scott, we are going to pause for a break right here, and then I want to bring you back and get your thoughts on what's going on in the livestock trade today as well. A lot of jumpy action as we head into the weekend, and we'll dive in a little deeper when we come back. All right, we're talking with Scott Gecas right now with Wall Street Trading in Chicago. And Scott, this morning we had news that we had some big export sales of pork to China. That's 2 weeks in a row, and both times they bought over 30,000 tons. Let's take a look at what we had here for weekly export sales. We had the cattle, the beef side rather, at 21,700 tons. And the pork at another big number, 54,700 tons, of which China bought 39,100 tons. I'll get it right here. 39,100 tons went to China. Mexico bought 8,900 tons as well. And those are two key figures in what's going on with trade tensions right now. So one has to wonder just how stable that demand is going to be.
Right, and you can see even with that 65% tariff, China continues to buy them for the second week in a row. And last week, it was the second highest on record. So even with the higher tariffs, they still need it. But at the same time, that African swine fever is still spreading. It's uncontrolled. It's starting to hit South Korea. There's rumors that it's going to be hitting North Korea pretty soon. So, it's not controlled. It's not contained. We expect that import campaign to still continue in the near-term months.
And yet we don't seem to have much market kick out of it today. Let's go through these livestock futures and take a look at where we now stand. Starting off with the cattle market, we have the June down a nickel at 110.03. All the other months very slightly higher. We have August live cattle 20 higher at 105.25. And then if you look at the feeder cattle market, now the feeders, remember, we're coming off of $4.50 losses yesterday. Today we have the August down 157 at 136.65. But it had at one point today been about $2.30 higher than where we are now. So at that point, we would have been up on the day by about 60 or 70 cents. Currently, September feeders are down 97 at 137.55. And then the lean hogs that we were just talking about, with all the big demand going on and the expansion of ASF in different parts of Asia, hogs are going down, and that leaves some scratching their head today. June is down 95 at 82.72. July down 55 at 87.33. So what does that mean here? When you look at the way the market is acting with a whole bunch of bullish news around, is it more taken aback by the fact that there are threats of tariffs against Mexico, because they are big buyers of pork too?
Right, and that's pretty much the reason why we're having this pullback in the hog market, just because of the rumors with the tariffs with the trade war talks with Mexico. If that increases to that 25% level, that's going to be a big factor. I will tell you right now, though, the traders are watching for headlines just across the board. The next headline that we are watching for is the tariffs against the European Union. So if that happens, just due to all the flight concerns and the air traffic control and all the plane subsidies, that's the next headline that we expect to come out. Whether or not that happens or not, we have no idea, but that's the next headline that we're looking for.
Okay, a very newsy week. Thanks, Scott, for joining us. Scott Gecas of Wall Street Trading in Chicago.